All right, everything should be good. Happy Sunday, welcome back. You guys should be able to see the dollar weekly chart. Let me get an audio check here on my end.
All right, everything should be good. Happy Sunday, welcome back.
All righty. All right, good to go, guys. Hope you're all doing well. Hope you guys had a lovely weekend and we're ready to get back to business here. A couple things been on my mind from this past week. Having spoken with many of you guys in one-on-one calls and then over the past few years, working with over 100 traders. And there's some things that come up consistently that the ones that unfortunately aren't on the path to reach success have. And then there's characteristics that those that are going to reach success, that are going to reach their goals in trading have as well. And I want to cover a little bit of that here before we get into today's session, today's analysis, and what we're looking for. So just a few minutes, and then we'll get into the usual business here. And what that is a process and a plan. You guys would be so surprised how many people I speak with that have million-dollar dreams, right? Big goals as to what they want to do with trading, but no real plan is that how you're actually going to get there, right? And the reason why I'm going to take time to speak about this is because I genuinely give a shit. And you're not going to see us in many other places, right? It's not flashy. It's not the new entry model. It's not the this is the only video you'll ever need and the rest of ICT's noise, right? It's none of that garbage. But it's actually what's going to make you profitable, right? So let's say, right, you have the aspiration of turning your trading into a business, right? You want to make it into a business that's consistently paying you out month over month, year over year. You have to have a plan for that, right? And as I was saying earlier, you'd be so surprised how many traders I work with that have these big goals and don't have a basic plan as to what they're going to do for the next 3 months, 6 months, a year. How long are you going to keep blowing challenges, resetting them, and doing that over and over and over again, hoping and praying something magical is going to happen in your trading as you just keep resetting and bleeding away your money? Nothing's going to change unless you make that change. And the biggest change that drives results for those I'm working with, and even those I've seen success with, is having an actual plan, right? And what do I mean by a plan? Well, plan in terms of how you're actually going to get there, right? How are you going to learn how to read price action? Then how are you going to develop a model? Then a trading plan to help you manage that model, give you protocols for when you should trade, when you shouldn't trade, no risk management, have risk management, right? And then after that, you need a system for back testing, reviewing, and improving what you're already doing. 80% of the traders I talk to don't have any of that. No ability to read price action, no model, and no trading plan. And the reason I'm willing to be honest with you guys and tell you guys the truth is because I'm not going to bullshit you. I know what trading has done for me, and I know how important it is for you guys. It's given me the ability to live in a beautiful country, best of the best, not have to worry too much about finances, how I'm going to take care of things, because I've locked in. I developed a plan. It took me years to get here, right? It's not easy. It's hard work, but you absolutely need a plan if you're going to see it through to the other side. And if you don't have that, you're going to keep staying stuck on the same hamster wheel that you've been on. Blowing challenges, resetting them, and guess who you're making happy? Apex and Top Step. And it's no joking matter, which is why, again, I'm willing to take the time to bring this up with you guys. Very happy to have spoken with many of you guys last week. Now, many of you guys, I have done the one-on-one action plan consultation, which is 100% free. Now you guys actually have clarity, right? What you're going to do and how you're actually going to bring your dreams to life, right? And have a real plan to actually get there. The spots for the coming week are half booked already. I was very surprised. We haven't even been promoting this on any of our social medias anywhere, and the spots are already booked up. So for those traders that I spoke with last week, and for those that I'm about to speak with this week, you guys are going to have a real plan instead of just a hope and a prayer, which unfortunately doesn't cut it in this business. So with that in mind, I'm hoping this is your wake-up call to take action, build structure, and actually have a plan for what you're doing, right? Because if you're aiming for nothing, you're going to hit nothing 100% of the time, right? So make sure you have a plan. Make sure it's realistic as to how you're going to get there. It's probably going to take a little longer than you want, but that's okay, right? It's either you lock in now or you clock in for the rest of your life. Which one do you want? So with that being said, guys, let's go and get into the business here. And by the way, you guys can sign up for those free consultations in the Discord or by the link that I think my team will be sending out at some point in this call. So let's go and get into the business, what we're looking at here for today. Beautiful delivery last week on dollar. I think they're saying tariffs or whatnot caused all that, but you guys really know what's going on. So let's go ahead and break it down here. Dollar, we'll take it from the weekly chart here. Hello to you guys. Slim, Hello, hello, Jeff. Good afternoon to you, my man. Happy pre-market traders. Absolutely. We're in for a wild ride here this week again, I'm sure. Carla, hello, hello. Good day to you, sir. Hoping that was SPY. Yeah, we'll see what's going on with the SPY this week here. Happy Sunday to you as well, Joe. All right, guys, let's go and get into it here. So weekly chart, we're looking at US dollar. So last week we covered these equal lows here would be the draw, and that's why I was kind of joking about they were saying, the tariffs have sent price lower, when in reality it's just the algorithm doing what the algorithm does, right? And again, while most are caught up in this frenzy of, oh my gosh, what's Trump saying, tweets, this and that, we're just here, calm, cool, collected, sorting out the price action, knowing what we're looking for, while most are getting caught up in a whole bunch of noise. So let's go and get into the business here. Last week, we were looking for this, well, a couple weeks ago, we were looking for this weekly fair value gap here for the market to trade up into it. And then we saw what the market stayed in the lower half, right? Whenever you see that, it's signaling the market's really weak. And then look at the big down close candles that we got into that sell side liquidity pool. Really, really nice delivery last week. And again, they just use the smoke screen of tariffs and what's going on in the world to deliver what's already in the price action, right? That's a huge step forward for many of you guys. And you want to understand, again, how to read the charts, and everything becomes clear. You don't have to worry about the noise. What's this person saying? What's the Federal Reserve going to say next week, right? You don't have to worry about that. Read the price action, and it'll help give you that clarity and remove a lot of the confusion. And the reason I know is because when I first started, I was in a lot of confusion. I was worried about the interest rates. I was worried about watching what Fed Chair Powell was saying while I'm trying to trade, right? I know you guys are probably laughing right now because of how ridiculous it sounds, but I used to do that, right? I was in that camp. But of course, we've seen it to the other side, and it's my goal to help you guys get to that other side as well. So weekly chart here, again, we have that weekly inversion fair value gap traded up into that. And then last week we got open, high, low, close, and expanding down into those downside targets. So what I'm going to be watching from here now is how we trade below these lows. Once we reach a key objective, right, like we just called the monster move in the dollar, when that happens and we reach key targets, generally that makes me patient. What do I mean by that? It makes me want to wait for more information and see what develops from here, right? Because these big major price swings like that, they take time to develop. So what I'm going to watch here is how we trade below these lows, and that's going to give me insight as to what we're going to see going forward in the next few weeks. So again, right now I'm monitoring, waiting for more information, with regard to how we trade below these lows. Working down into the daily chart, I know this is a little busy here, so let me move this over here. Then we'll do a short recap of what we've been covering here with this nice market maker sell model. So as we were trading up into this daily fair value, let me just take this off here. So as we were trading up into this daily fair value gap here, we qualified this as a measuring gap, right? Why is that? Because if the draw's down here, these equal lows, right? And they're going to want to take it down into there. This is where the price swing is starting, and this is where we're expecting it to draw to. Then we can measure that price swing, right? And then as we covered at 20 to 30%, which is here, or 25 to 30% rather, we can expect a breakaway gap. At 50%, we can expect a measuring gap, and then we can expect more accumulation to take place inside this lower quarter as well. And then targets are delivered. Huge credits to ICT for making all this information public, and it is just truly a beauty to see it deliver week after week after week. So we got the market trading up into this gap. Why is this a measuring gap? Again, because it's at 50% of the anticipated price swing, but also taking that one step further, we don't want to see the measuring gap filled in, right? So we traded up, couldn't reach midpoint, market broke down. And for those of you guys that took notes last week, especially for the currency traders, you guys are absolutely banking, right? So we covered daily fair value gap here and the bearish breaker block. And then we traded up, made the high of the week on Monday inside the daily fair value gap and breaker here. And then just a nice dive down into the relatively equal lows back here. So again, same thing as I covered on the weekly chart, right? Once we see a monster move like this, I want to be patient. I want to see what the market's going to do at these levels. So again, right now I'm waiting for more information to see how we trade below these lows. And what does that even mean, right? Do we keep accelerating to the downside, right? And really start breaking through these lows aggressively and look for lower prices all the way back here? Or do we trade below these lows, start rejecting and working back up into the upside of this range from high to low, right? Those are all things I'm measuring. I'll have to see how we trade again at this key level for the next couple of days, and then that'll become clear to us, and the next Sunday we'll be able to sort out longer term price projections like I've been able to give you guys here as of recent, working this whole market maker sell model down to these equal lows here. So for currency traders, absolutely ahead of the curve. If we are bearish US dollar, then of course we're bullish on euro, pound, Aussie dollar, right? All your foreign currencies. Hourly chart's going to be the same thing, right? Watching how we trade below these lows. Do we get bullish market structure, right? Or do we just keep accelerating? I'm not trying to call a bottom in this market. It's very bearish, but we have reached a key level, right? So that's something to factor into your analysis. There are equal highs here and equal highs back here. I'm not suggesting the market's going to work back up into those yet, because again, I'm not trying to call a bottom until market structure order flow signals that we're seeing a change in the direction. Moving over to the bond market here, weekly chart. So that weekly fair value gap that we were expecting the market to trade up into, we hit that, and then we got an extreme breakdown here from this key weekly level. Just absolutely insane price action here. Strong rejection from this level here. And now what I'm watching, now that we close below this inversion fair value gap, I'd like to see this inversion fair value gap here, send price lower, work into the sell side here, and these equal lows down here from the inversion fair value gap. So that's what we're looking at to the downside on bonds. Working down into the daily chart here. Here we can see that inversion fair value gap here further. Here. So looking for the market to stay below that inversion fair value gap here. Looking at the 30-year, we have a fair value gap here with the breaker, hitting it, rejecting, right? So again, the draw is sell side. And then we have these equal lows back here, right? That serve as the draw. So that's what we're looking at for bonds going forward. Now, what does that mean for US dollar? If we do see the treasury bonds continuing to crater, that's going to put upside strength in the US dollar, right? So as long as we continue seeing bonds crater, which is what we're looking at in the market structure and the order flow, then looking at the US dollar, that could provide some lift, right? But I will need to see that confirmed in the price action, because we have seen a lot of unsymmetrical markets, which just means the way we expect markets to generally move, right? Dollar higher, bonds lower, hasn't really been the case this entire year. So when that is a factor, I look at the price action itself. So I'm not just automatically saying, all right, lower bonds, dollar has to rally. I'm waiting to see it confirmed in the price action as well. So watch this inversion fair value gap here. Want to see it hit that, sell off into sell side here, and that'll be a nice trade setup to stock here for this week. Moving right along into the NASDAQ. All right, NASDAQ, the $1 million question. All right, everyone wants to know where stock indices are going. Let's go and break it down. So weekly chart, these equal lows here that we were looking for, really nicely delivered here on the downside, which is what I was just alluding to here before, which is we haven't been seeing a lot of intermarket symmetry in the markets as of recent, right? We've seen dollar cratering, and we've seen the same thing with indices, right? So there's not been a lot of intermarket symmetry, and that's because of all the craziness that's going around the world right now, things we've been talking about for years, and we're starting to see the effects of that right now, right? So we're seeing markets absolutely decoupled, which again, as I mentioned to you guys last week, if you're trying to force intermarket analysis, like Dylan, I remember you back in 23, back in 24, talking about intermarket analysis, dollar higher, indices lower. Absolutely, right? It's very important to understand those intermarket symmetry and how that comes together. However, when it's not present in the market, you can't lean on that tool too much, which I haven't been leaning on a whole lot this year. I've just been trading with the market and the market structure and what the order flow is giving me, which in this case has been bearish dollar and bearish index futures, right? And again, it helps not getting lost when you know how to read the price charts, right? So let's break this down further. So we see weekly chart, we've dropped down, equal lows, target we were looking for has been delivered. And then we've seen a strong rejection here to the upside. So very similar to US dollar, I'm monitoring how we trade below these lows. And then we'll see, do we reject, see bullish order flow and potentially work up into these highs? Could be a factor. What I do like to see is that the markets are seeing large ranges, right? A little too large, right? But it's better than this consolidation action here, right? Which is the accumulation phase of the yearly range. We've seen a move away from that, and now we'll get information as to how we trade below these lows. Let's go up to the monthly chart. If we look at the dealing range on the monthly chart with this swing low here, this swing high, the market's dropped down into discount valuation perfectly. And then we've also, again, taken out those equal lows. So what I'm watching is how we trade from discount. There's specific things I look for, like if I'm bullish, I look for specific things as to how the market trades in a discount. Vice versa, if I'm bearish, I look for specific things in the premium of the dealing range. So that's what I'm watching here. We trade into a discount, nice rejection to the upside. Now we want to see, does that sustain? Does that continue? And do we continue seeing all-time highs after trading down into a discount of that dealing range? So something we'll have to monitor. Weekly chart, last line in the sand for me to be bearish still would be this up close candle here. If we trade through this up close candle here, I am no longer bearish on this market, and then I'll be looking for higher prices for the market to work up into the swing high, this inefficiency, and then potentially these equal highs if we trade through this up close candle here. Refining this further to the daily chart here. Yeah, just really nice delivery there into these lows here. So these lows here are taken out. And then what I'm watching in here, let's go ahead and zoom in here, is this down close candle, right? So this down close candle, we have a large wick here. So when there's an order block with a large wick, I pay attention to the wick. So extending that through, we have seen the market stay in the upper half. So this is going to be the key level that I'm using to frame my analysis and my bias going forward, right? So it's going to hinge on how we trade inside this level here. Meaning, if we stay above this bullish order block and we start to work higher, take out this high, show strength through these up close candles here, I'll look for midpoint of this wick here, swing high, and then if we show speed through that, then we can work all the way back up into these all-time highs here. Again, none of that is what I'm looking for, what I'm anticipating until we get above these two up close candles here. So watching these two up close candles. Why these two up close candles? Because it's the most recent up close candles before this energetic breakdown, and also there's a breaker here, right? So there's a breaker here. Body's respecting that, traded up into it once more, broke down. So as long as you remain below the breaker, again, I'm not trying to call a bottom. However, we're watching this bullish order block here. Above the order block, if we start to show speed, strength away from it, then we're looking for higher prices. However, if we stay below this breaker here, then I'm looking for lower prices. So it'll really just be a matter of getting a feel for what they want to do with it, right? We just called a monster move in indices all the way down into these lows. Now I'm going to let that next price run develop, let the market give me clarity before I'm going to jump the gun and give you guys major long-term targets again. Because again, I want to remind you guys, huge moves like this that we've been able to call out, they take time to develop, right? So I'm getting a feel for the market structure, the order flow, what they want to do below these lows, and then what they're going to do inside these key levels. And then that'll give us insight into the next coming weeks. Working down into the lower time frame here. We also have a bullish breaker here on the hourly chart, right? So we have range low, range high. This is the bullish breaker. We've traded down into it. We're starting to show initial strength away from it. So for lower time frame analysis, right? And that's the good thing about what we're able to do, right? I'm saying, all right, this is what we're looking at on the weekly, the daily, but the good thing is we can refine that throughout the time frames. So hourly chart, right? We've retraced, we saw an impulse run higher. Market traded back down into this bullish breaker, watching how we trade there, right? So as long as we remain above this bullish breaker, then the attention is on the buy side here. And then all the way back here, if we start to really displace and make some speed away from that. If we lose the breaker to the downside, then my attention goes to these equal lows here. So this is going to be the key level to frame on your lower time frame for intraday trading. So for those of you guys that may be in their Monday morning, Tuesday morning looking for setups, this is going to be the key level I'm going to be using to frame my intraday trades as of right now. Above that, again, buy side. If we start to work down through that, then I'll look for sell side there. You may be saying, Dylan, that's 50-50. And again, as I've already covered with you guys, once we see monster moves like we saw in NASDAQ, like we saw in dollar, and we reach several key targets, I always take the position of being neutral and waiting for more information, right? So that's why I'm having to use these key price levels to just get a feel for what they want to do with it. Let the market tell me what it's going to do, let it show its hands, and it just makes our lives a whole lot easier instead of just trying to constantly predict when nothing is one-sided and obvious. Because when it is one-sided and obvious, we're all over it. But when it isn't, we have to be able to wait for more information. The markets have been relatively challenging because of the ranges we're seeing, the levels of volatility, and the levels of manipulation. So one of the things that I've seen from my experience is these conditions can be really, really difficult for newer traders or developing traders. If the market has cleaned your clock, handed you your ass, however you want to look at it, these are great learning opportunities, right? So what am I saying? If you maybe went into some drawdown, maybe you blew some combines, right? Use this as an opportunity to tighten up your risk management, right? Because you never want to enter a session without a plan. And how do you know you're entering the session without a plan? Well, if you leave the session like, oh shit, I lost a lot more than I wanted there. Oh man, I just blew my account. or man, I'm in deep drawdown. I didn't even plan for that. You're going in with no game plan, and your execution is reflecting that. So if you did have those experiences, that's all part of the process. So don't beat yourself up. Don't say, man, I'm a sucky trader. Oh my gosh, it's going to take me a long time. Keep your head up, stay positive. But what you want to do is use those instances to grow, right? So use those opportunities where you may be going in more drawdown than you want to. Maybe you blew your funded account, right? Use that as an opportunity to look at your trading plan, right? Make sure the risk protocols are there. Are we actually following them, right? And then improve them and refine them as you need to. So these are difficult market conditions, and they're going to expose your weaknesses if you're not careful. And the best thing you can do with those experiences is learn about yourself, learn your weaknesses in your trading, and don't turn a blind eye to it. Don't do what I did and add years onto your trading journey. Look at what you're doing, look at what's not going well, look at what is going well, and look to improve it. Don't turn a blind eye to it, sweep it under the rug. You're just gonna add years on your journey, whereas you could just focus on what's holding you back, what's causing you to blow accounts, what's causing you to not be successful, put things in place, and focus on just getting 1% better every single week, every single month. And then what's gonna happen is 6 to 12 months in, with the real plan, with real improvement like I'm talking about here, you're going to be on a whole nother level. And you're going to give yourself such a good chance of getting consistently profitable if you're focused on the right things. What are the right things? Things I'm talking about here, right? Having a real game plan, having a way to improve and refine upon what you're doing, right? Because it's normal to, if you're rushing to pass an account, if you're rushing to get funded, it's normal that you're going to blow them. You don't even have a real game plan and a real skill set to lean on. So what you're going to want to do, focus on what we're talking about here, learn how to read price action, learn, develop a model, create a trading plan, backtest, and journal every single trading day. And when I say backtesting, I get a lot of questions on it, right? Because a lot of people think whenever I mention backtesting, it's going back 6 months and looking at random 1-minute candles on FX replay. In my opinion, that's not effective, and it's more so a waste of time. When I say backtesting, right, when I'm referencing backtesting, it's referring to that day. Every single day, there's a new backtesting opportunity available using the daily chart. There's always a daily candle. There's an hourly chart, a 15, a 5, and a 1 minute. And you want to get into the habit of looking at that every single trading day. Like I told you guys, right? Getting to consistently profitable trading, getting to the other side takes hard work. It's not going to be easy. But this is what that hard work looks like. You have to be digging in your charts every single day. The problem that usually then comes with that is, all right, Dylan, yeah, I'm doing that, but it's taken me 5 hours to do. Not really, but 2-3 hours. And if that's the case, and your backtesting, your review sessions are taking you 2-3 hours, you're not going to do it consistently. So you want to be able to refine that process down to about 45 minutes to an hour. For those I'm coaching, I'm mentoring, that's usually what I recommend. Because if you can, every single day, backtest, look at your charts, review what the market did, look at what you were looking at, and do that for an hour every single day. In 3 months, 6 months, 12 months, you're going to be unrecognizable, but you have to be willing to put in that work. For those of you guys that may not know what that process looks like, all right, Dylan, yeah, I can see what you're saying. That makes sense, but I just can't really picture what that looks like. I will be doing a YouTube video breaking that down, how I use Notion. I'll probably even be giving away my Notion template that I use for my journaling and backtesting every day. I'll make that available to you guys. And then at the same time, I'll also do a tutorial on how I backtest and how I journal every single trading day. And it's still something I do, right? So I don't want you guys to think I'm just talking out my ass here, right? This is what I did to get profitable, but it's something that I still do every single day. And there's no way around this hard work. You have to be willing to do it. So that's it for me. Any questions before we get going? I'll probably take a few and then we'll keep it moving. Kevin, happy Sunday to you, my man. I've been well. Hope you're doing good as well, brother. Alessandro, hey Dylan, time ago you mentioned that you consider the continuous contract for macro analysis. Can I assume that a level defined on the continuous contract will still be used on the NQM 2025? Yes, sir. Yes, sir. It will be. Joe, since the SPY is heavily weighted, yeah, S&P. So yeah, since S&P is heavily weighted big tech, would you say that the markets have found the bottom? That's a great question, Joe. And the good thing is, let's go to S&P here. What is SPY? For those of you guys that may not know, the SPY is the stock, the equity equivalent of the S&P 500. So looking at tech, obviously we understand a lot of the economy now is run on tech. AI, computers, software, hardware, all that good stuff. So it makes sense that since the economies are so heavily weighted in electronics, tech, that the stock market is going to be heavily weighted in that. So now that we're all clear and on the same page with what that even means, are we seeing a bottom in the stock market? Since NASDAQ is also tech, right? NASDAQ is going to really follow S&P for the most part. They move in sync. What I covered for NQ is going to be what's going to determine if there's a if there's a bottom in the market based off the key levels that we're looking at. So by looking at the NASDAQ analysis I shared, looking at those key PD arrays, how the market relates to them, right? What does that mean? Well, for example, let's look at that bullish order block, go back to NASDAQ here, right? Do we stay above the breaker? Do we start to really displace higher through that? And then going to that daily chart, right? Do we really break away strongly from that order block and start displacing higher? If yes, then we can have confidence that we've likely seen an intermediate term low and that we can look for higher prices. So it's all about having your key levels top down, doing analysis, seeing how the market trades at those levels, and just let it tell you what it's going to do. So great question, Joe. You take a look at gold and crude oil. Gold, keep buying and just keep your eyes shut. Let's go take a look at gold. All right, so gold, I've been screaming from the rooftops to buy gold for like the past 4 or 5 years, especially with like family and friends. It's not one I trade. Personally, trading it isn't something I'm too interested in, but in terms of like holding it long-term, right? Being a long-term holder of gold, I think is absolutely a no-brainer, right? If you understand what's happening in the debt market, right? The increasing amounts of government debt and what fiat currency, I'm not going to go into all that here. I can turn this into a 20-minute discussion, 30-minute discussion, but if you understand that the money's monopoly money, it's not backed by anything, and eventually the chickens come home to roost, you're going to understand why gold is such an important asset, right? Gold is real money. And the reason we're seeing gold absolutely moon right now is because a lot of big money is piling into real assets, right? Things that actually hold value, which obviously our currency does not because it's backed by debt. But if you guys want to learn about that, study fiat currency, study what that means, study the Federal Reserve, look at the creature of Jekyll Island. That'll all give you guys an idea as to kind of what's going on if you're not in the know. Gold is going much higher. So as I've been really saying these past 2-3 months on gold, when a market's at all-time highs, we're not trying to fade that. So you do what? You keep trusting buy models on gold. Any retracement is a new buying opportunity, right? So looking at gold, what do we see here? Retracement into a fair value gap, taking out this low, buying opportunity, market rips. Fair value gap, retraces down into it, buying opportunity, market rips. Down close candle, retracement into this fair value gap and down close candle. That's a bullish order block. New buying opportunity, market rips. Gold's going to keep ripping, looking for higher prices. And then looking at the daily chart here. Got a nice breaker here. So we wouldn't want to see that taken out, right? We've seen a low run on stops here. This becomes an intermediate term low. After we see stops taken, big price runs begin, right? So looking for much higher prices on gold. And I do not think the show's going to stop. And then looking at silver, haven't seen silver in a while. Let me see. Wow. Silver heavily manipulated. All right, that'll be interesting to see. So looking for higher highs on silver here as well. And then the other one, James, take a look at crude oil. Yeah, let's see what crude oil is doing. All right, so monster move lower on crude oil. I did want to touch on that. And I'm happy to see this, right? Because for those of you guys that like to trade crude oil, you've probably noticed from March of this year all the way back to, 2022, crude oil has been a very difficult market to trade. Why is that? Because it's been stuck inside this range here, right? And not to say it's difficult for scalping or intraday trading, sure. But for looking for higher time frame, clean, sustained price runs, it just hasn't really been in the cards because we see the market's been in this longer term range here. The reason I'm expressing enthusiasm, why I said I was kind of looking forward to sharing this with you guys, is because we've now done what? We've left this consolidation range, right? And then what do you see is all throughout here? Sell side liquidity, right? Look at all these equal lows here, all these equal lows here, and all these equal lows here. So we finally traded down into that. So now what I want to monitor, right, is now that we've taken out that sell side, do we reject and start to work back up towards the upside? That's what I'm looking at right now. We've taken out these lows, and we have all these nice stacked highs here, and then you can see that's a nice trend line liquidity, so that'll be really nice liquidity pool for the market to trade up into. So what I'm watching for crude oil for a mega trade here, we'll be seeing how we trade below these lows here, and then if we start to reject, get bullish price action, then I'll be looking for higher prices. As of right now, though, there's nothing bullish yet to work with. So what we'll look for in crude oil, as long as you remain below this down close here. So watch this down close here. As long as you remain above that, we'll look for this fair value gap here, this fair value gap here. If we start to trade up through all those levels, then it's on. And then we'll start looking for all these highs back here for crude oil. All right, James, so I took a look at gold, took a look at crude oil. Joe, thanks, Dylan. Yeah, my pleasure, brother. Dane, take a look at dollar yen. Yeah, let's take a look at dollar yen. All right, so very similar to what we've been seeing in the US dollar. Fair value gap here with a breaker here. So hit that fair value gap with breaker, sold off. We do have sell side back here. I am slightly reluctant to call the sell side though, because of the fact that dollar has already reached these key lows. So it makes me a little more weary of expecting these lows here to be delivered. So we may see these lows not deliver. Obviously, order flow is still clearly bearish, right? So we still have clearly bearish order flow, clearly bearish market structure here to work towards the downside. However, because we have dollar already reaching that key level, and because of what we're seeing in the bond market right now, a little suspect to trade down into these lows. So as of right now, because I'm waiting for more information on dollar, it's not easy like other weeks, right? Other weeks, I point you guys, all right, dollar yen's going lower. I'm able to easily point, all right, guys, euro, we're looking for buy side, right? Pound, we're looking for higher prices, right? That's easy for me to do when I can see clearly where that dollar is going. When I don't have as much clarity on the US dollar, it makes it slightly more difficult. So just kind of giving you some background as to why it's not just clear black and white. This is what I'm looking for, because there's a lot of other factors going on right now. And number one is the treasury bonds, right? Like we covered, we got bonds absolutely melting. So that traditionally will put strength into the US dollar. If we see strength in dollar, then we'll see strength in dollar yen as well. But as long as order flow remains bearish, just keep looking for lower prices. So that's how to weigh that out. Bertice, did we go over Bitcoin and XRP? No, but we need to. One of the gentlemen in the Discord was asking about that. So let me get to that question here, but let me make sure I get to his specific question. Let me go ahead and pull that up here. All right, what do you guys think about the Kraken correlation between Bitcoin and Ethereum? ETH looks like a good spot to buy. Bullish SMT? Yeah, let's go take a look at that. All right, so we'll look at Bitcoin. We'll start with Bitcoin, and then we'll go over to Ethereum. So far, we've just been really slow grinding lower, really lethargic price action. The range that we're trading in, again, is range high to range low. The market has traded into a discount, and then we've seen a 3 drives pattern, 1, 2, 3 inside this fair value gap as well. What I'm watching now that we traded below this low, we're failing to do what? Displace. When I'm bearish, what I look for is for the market to displace through lows, right? And then reject highs. But what are we seeing now? Are we displacing through lows still? No, right? Low, we take it out, pull back into the range. Low, take it out, pull back into the range. That's not as bearish. So what I'm watching now is how we trade below these lows. So could this be a stop run in a discount to continue higher and keep making all-time highs? That's a possibility, right? So that's what I'm weighing out right now. However, I am not 100% bullish until we get above this wick here. So we have this wick here. You'll see the body stay below the lower half. If we get up above this wick on a closing basis on this weekly chart, then I'll look for higher prices and be bullish. Daily chart, looking at Bitcoin here. Again, we've been calling this thing lower. Yes, it's been going lower, but it's just been really nasty price delivery. We've been watching this fair value gap here. Let me extend that through. See bodies respecting that, working lower, this low taken out, but we failed to do what? Displace through it. Fair value gap, we've now closed above it. So we are seeing initial bullish indication. So my attention goes to these equal highs here. And then how we trade there will be important, right? So could this be the market trading all the way down into a discount to continue higher and look at the buy side of the curve? It's a possibility. And then with what my man Leon was wondering, huge divergence, right, between Ethereum and Bitcoin. All right, so Ethereum's been absolutely cratering, taking out all the downside targets we've been looking for, and they even got all the way down into the 1,500, right? So I think last week and a couple weeks ago that we'd be looking for below $1,500 on Ethereum, and that's delivered nicely. So we do have a huge SMT, right? Bitcoin did not take out this consolidation here, whereas Ethereum did. So if this SMT holds, right, and we start to see bullish price action as we covered here in Bitcoin, then that could be an intermediate term low, and then we could work back up towards all-time highs. That's a possibility. But what I prefer to see is cleaner price action, right? When we see all this overlapping back and forth, it just makes it exceedingly difficult to analyze and trade. So we want to see cleaner price action, displacements, and balances, things that just make it easier to see the market structure and see the order flow. And then XRP, someone's asking, usually get XRP in here, so let me just go ahead and cover that. All right, so we got those targets that we were looking for XRP. I said we'd be looking for these lows here. All right, these lows here were relatively equal, and we see bearish order flow, which simply means the market's going to attack inefficiencies below market price or liquidity. There's no inefficiencies here inside this range, just the liquidity, and that was nicely delivered. So what we're watching now, now that we traded below these lows, again, it's the same thing I covered on Bitcoin. We didn't displace through the lows. We traded down through them, and we rejected it. So what I'll be watching for is if we get bullish order flow in Bitcoin and Ethereum, if that SMT holds, then we could be seeing higher prices for XRP as well, as long as the order flow remains bullish. And if we are going to remain bullish, we would want to see this be an intermediate term low, and we wouldn't want to see that taken out. So above that, with bullish order flow, then we could even see higher prices on cryptocurrency for the time being. So just what I'm weighing out right now. Again, none of this is financial advice. Make sure you're doing your own research. Just reading the candlesticks here. Pro, can you take a look at the yearly? On day, it looks, I'm not sure what that means. I believe you're saying look at the yearly chart, but I'm not sure what you're referring to. So let's go to, I believe you're referring to indices, is that right? Day, D-A-Y, I don't know a ticker that's D-A-Y. Are you saying DAX? D-A-X? Dollar. Oh, okay, I got you. Yeah, so using the yearly chart, 6-month chart for macro perspective, absolutely. Yeah, so we have a daily fair value, a yearly fair value gap here that we're now trading into, absolutely. Autocorrect, sorry, yeah, no worries, I got you. So yeah, yearly fair value gap here, we are trading into that, absolutely. Looking at the monthly chart as well, we can see this range a little clearer. Right, so we can see range low, range high, consolidation. We've now taken out that sell side in a discount, right? So that would be a key level to look for and see how we trade there, absolutely. Which is why now I'm more neutral, because we have traded now into a deep discount and we've taken out sell side. So how we trade there is going to be extremely important going forward. And then the fact that that overlaps with a yearly fair value gap just gives it even more confluence, absolutely. All right, let me make sure there's no more questions in the Discord here. All right, should be good to go. Awesome, guys. That's it for me then. That's what we're looking at here for this week. Oh, actually, I almost forgot. All right, let's take a look at these grain markets here, and then I will finish up with this. All right, so looking at the grains here. For corn, we have equal highs here. That's the draw. Really like how we closed above this fair value. Well, technically we didn't. I like how we closed at the high end, more specifically than this weekly fair value gap here. Want to see this be used as an inversion gap, get above that, and then take us into the buy side here. So that'll be a nice setup to watch for this week as well for corn. For those of you guys that are interested in the commodity markets. And then we'll also be looking for the same deal here for wheat. Wheat's been in a bit of a range, so I'm more reluctant to trade it as opposed to corn. Corn is showing more strength here to the upside. So look for these equal highs here. And then the way you can use that is watch this to be a inversion fair value gap, let it trade down into it in the lower time frame. And then once it displaces away, you can use a lower time frame and balances along into those equal highs. So that's what I'll be looking for this particular wheat for the grains. And then even looking at soybeans. Let's go to the daily chart here. Looking at soybeans here, we have these nice equal highs here as well. So looking for higher prices on corn and soybeans. So I want to share a little bit of commodities and what I'll be looking at here this week, what opportunities I'm going to be focused on. Bernice, so you previously called Bitcoin to 45K. Would you agree that the tariffs is the only reason why that changed, or was this pure fear, uncertainty, and doubt? Fear and washing out sellers only to go higher? Yeah, that's a great question. So one of the good things with what we're able to do is the analysis is fluid, right? So for example, each candle gives us new information. It gives us new data, right? So what I'm looking at maybe 3, 4, 5 weeks ago changes as I get new information, right? So when order flows heavily bearish like this, and we see like this wick, the market staying in lower half, like those are exactly things we want to see. And we want to see the market continue working to the downside. But if the market presents me with new information, right? Like we now traded below this low, but did we accelerate below that low and start to pick up speed and really run for that 45K level? We didn't, right? We saw the opposite. The market hit it and rejected it. So the good thing is once you have the skill set, you acquire the ability to read the language of the candlesticks. It's really helpful in being flexible. So personally, I'm not smart enough to figure out tariffs, the economic news, all that stuff. I'm not smart enough to figure that out. What I am smart enough to know is the candlesticks. So I just take it candle by candle, get what information I'm getting, and then I take it from there. So we trade into a discount, right? We're seeing that the market's no longer displacing, breaking down through those lows. So that gives me new information to work with, and then I have to take that as I get it. Like I said, though, I'm not smart enough to figure out tariffs, how that's going to impact the economy, the bond market, intermarket analysis. I'm not able to do that. So what I do focus on is what I can control, which is my analysis on the candlesticks. So that's what I'm looking at right now. When I get new information, I pivot with that. And one of the things I was looking for in Bitcoin was to follow Ethereum, right? So we saw Ethereum absolutely just crashed, right? And all these key downside targets here. So I was expecting Bitcoin to follow suit, but Bitcoin was being really reluctant to keep dropping. So that's why we didn't get that 45K for Bitcoin. But I already covered what I'm watching and what we'll be doing to frame bullishness on Bitcoin if that's going to be the case going forward. Yeah, great question, Bernice. Jeff, thanks, Dylan. Appreciate you, my man. Thanks for joining. All right, last one. So we'll look at Australian dollar, yen. Did they tag that sell side low? Yeah. So sell side's taken for Australian dollar, yen. All right, so watch this fair value gap here. We did trade all the way down to that sell side here. Watch this imbalance here. And that's going to give you insight, right? If we get through it, buy side. If we continue bearish and we start to sell off from this gap, then we can continue looking for lower prices. They did trade low enough to trigger these sell stops here, but now these lows are relatively equal, right? So that's something to keep in mind for the Australian dollar versus the yen. Bernice, Ethereum never hit a significant low. It actually left equal lows. Let me go back to Ethereum here. Yeah, we did. We reached several kilos, right? So this consolidation here, all that sell side is going to have a lot of liquidity down below it. And look at all this consolidation action here and all these lows below it, right? It may not be a kilo from our analysis, but if we look at it from a retail perspective, right, what's this? Support, right? What's this here? Support, right? So they are kilos, but as you mentioned, they did leave these relatively equal lows here. which is always a factor, right? So it does make it slightly more difficult to trust higher prices, especially when they leave such clean lows like that. But the good thing is when you have the ability to read order flow, the market's going to tell you, right? So if order flow remains bearish, then we look for the lows. If order flow turns bullish, then we're able to use that information as we get it. So I can't overstate the ability to read order flow. Those of you guys that are working with me, you guys are already smiling because you guys know how important reading institutional order flow is. For those of you guys that are not, focus on learning how to read institutional order flow. It's going to change the game for you, and it'll give you confidence and clarity when you're looking at these markets. It's going to remove all the hoping and guessing, and you're going to have very specific ways to measure. Is this market bullish or is this market bearish? And it's going to be black and white. It's not going to be, well, maybe not. Read order flow. It's going to tell you where that market's going. All right, great questions, Bernice. RJ, top-notch analysis as always. Thanks for sharing. Appreciate you, RJ. Thank you very much, sir. All righty, guys. That's going to be it for me this week. If you found anything insightful in this one, hopefully it's to get a game plan. Have a game plan. Plan what you're going to do, because if you plan for nothing, you're planning to fail, right? And I mean that in the sincerest way possible. It may come across as harsh or maybe too truthful, but if anything, I'm not going to bullshit you, and that's one thing you can count on. Have a phenomenal rest of your weekend, and we'll be back to business this week. Take care, everyone. Daniel, any videos on order flow? Coming soon. Take care, guys. Have a good weekend.